Hello, Warriors. Let's have a good week. Oh, what the hell? Let's have a great week. Hi, Brock. How are you? Super Bowl indicator, shorts the S&Ps. AFC Team 1. So, Euro had a very good Friday last week. I think there's another wave left to the upside here, as well as one more wave to the downside here in the dollar. May wait for a turnaround Tuesday to try it. I think we're going to at least trade 96.5 on the Dixie. There's a lot of support at 96 on some the 200 week moving average down here. The off number is up here at 88, so let's see what happens against 88 maybe tomorrow. So the same scenario applies in Euro. It's not going to take much to have a 2-week reversal here, closing back over 27.70. Probably the best way to do it is a scale in. 1040 on this moving average is going to be about 61.8 back. Hello, Brooke, Shahab. Everyone doing all right. And a little interesting formation happened here on Canada. Had a pretty nice 3 drive up here. Here's 1, here's 2, here's 3. And, you know, I wouldn't be looking for a ton because we also threaten a major breakout here in Canada. So, you know, for right now, I'm just considering it counter trend. It would have to do a lot of damage, you know, like perhaps getting all the way back under 31 for me to get bearish on Canada. But we're also pretty overdue for a pop in crude. Thought we might go for some stops, but see how we're diverging here. Look at this low. So we've been diverging for a few weeks now. I'm going to wait for one more low, see if we could get another break in S&Ps. S&P should have trouble up at the 60 level to get one more wave. This kind of looks like 1, 2, maybe get one more shot down to targets around 31.60. You want to get real bearish for this move. I have some confluence coming in here. Oh, I don't want to change the color. Right here. Kind of ties in with the 200-day on the S&Ps. We're trying to hold the 50-day right now, but that's going to take you under the 3100 target and basically back into this throwover. So something to pay attention to. We start taking out last week's lows on this so far feeble bounce. What I think might help it is if we get a little pop in yields. Remember, the key chart for me is the 10-year. And we're not getting trades in the 10-year yet, but remember, looking for new lows under the 143 level. Looks like the 30-year is up 4 bips. And actually, the 30-year looks better than the 10-year. So maybe we get some type of rally here and a little bit more risk on before we head down again. I don't think that yields have bottomed yet until, I know I sound like a broken clock, till the 10-year makes new lows. And let's see, gold under some pressure. Certainly last Friday looked like we were going to, you know, challenge the high of the move. I don't think that's still off the table. You know, gold still looks a lot better than silver. Here's gold. Here's silver. Silver underneath resistance. A setup that I'd be looking for. I don't know if it's going to happen. Yes, I also heard that they cured corona in Thailand using a combination of AIDS drugs, which some people is kind of confirming that it may have come from that biolab in Wuhan. Anyway, so I'd like to see A great setup to me would be a new high in gold, you know, taking out this high up here, and silver not being able to do it, because right now we have two lower highs in silver. Okay. Gold was making new highs here while silver wasn't. We'll see if that could happen one more time. Blake, I know you're having some internet issues. Just saying hello to you. Can you hear me?
I can. Can you hear me?
Yeah, you're clear.
Yeah, I'm using my hotspot from my mobile device and I'm on my laptop. So
Okay.
I'm kind of here.
Okay.
It's like trading blind. I'm missing Bloomberg, all my trade systems. I've got JP Morgan running, which is fine, so I can execute, but I'm
Yeah.
missing like everything else. So
Okay.
yeah,
All right. You're
I'm
here. You're here, but you know it's hard. You can't show charts or anything like
No,
that
I
right
can
now.
show charts.
Okay.
Let me
All
see if
right.
I can. Let me see if I can. First of all, I gotta. I'm using Zoom for the first time on this. Uh, let's see,
We
screen.
really never know how, you know, dependent we are on things like the internet until we don't have them, and we have to work around it. It's really, you know, a
Can you see
lifeline.
my Can you see
Yeah,
my
it's
screen?
coming up, Blake. Yep, got it.
Yeah. Yeah. Apparently, my internet's been very intermittent since Thursday. So Thursday, and just so you guys know, I use a fiber connection. So it's the best I can get uh, into my home office, and it's usually really stable. And it's been down for days. Apparently, because I talked to a tech in Arizona yesterday. Apparently, there was an accident and knocked out one of the nodes on Thursday, and they've been trying to get this node back up and running. And it happened by the Phoenix Open. So my assumption is some drunk
Yeah, yeah,
person um, knocked out a pole, knocked down the node. Uh, but he's like, it's pretty serious because they've had people there running around the clock, like a four-man team and they call it the bucket truck. The bucket trucks where they have the bucket and up. Anyway,
yeah.
he's like worst case scenario, and which seems like it is worst case scenario at this point in time. They had to order new equipment, which is going to take a couple of days. So
Where does it come from? China?
no, I don't know, man.
Yeah.
But I'll tell you, it's interesting because I have like anybody that has normal internet, like normal cable, ISM or
Yeah.
I whatever it is, their normal connection, they're working fine. Those of us that have the higher speed, supposedly great internet that normally doesn't go down for anything, like everybody else is usually down, and I can still be running because it's a dedicated line. It's down, so it's of course, that happens. It's like, man.
Yeah.
And then on top of it, we've got some family not feeling too well around here, like my wife. So I'm juggling a few things at the moment, and the market happens to be one of them. So let me give you my observations, which is very much uh, uh, the observations of what's happened like the last 24 hours. So regarding, well, first of all, regarding the equity markets, so, you can see I'm clearly I've got kind of my focus on the S&P right now. The S&P is finding support the 50-day moving average, which you can see right here. Also, it's around the 24% retracement of this last big leg higher. We have broken the upward sloping trend line, which I'm assuming at this stage in the game, while we're below, let's just call 3260, 3270 roughly in the S&P, we're in breakdown territory and we're making lower lows. So, with all the measures that China has taken over the weekend with liquidity, banning short sales, surprisingly, the S&P is holding up pretty well. Let me pull up really quick because I haven't done this yet. So let's take a look at the Shanghai index really quick.
FXI is an ETF for it.
Yeah, but
Oh,
that's not
okay,
going
yeah.
to trade.
Oh, yeah, that trades here. You're right.
Yeah, I don't. Uh, I don't
What
know
what are they
why.
going to do to me if I do some short selling over there? Extradite me to China?
Yeah, we can. Well, yeah, exactly. Let's take a look at let's take a look at the Hang Seng Index. Is that? Oh no, I don't have it here. I have everything on Bloomberg, which I don't have Bloomberg here, so I can't pull up.
Well, Hang Seng's pretty ugly that you just
Yeah,
showed. Yeah.
yeah. I mean, it was getting ugly, but here's the S&P where we stand right now. And the bottom line is, and if you look at like, Japan, like here's the Nikkei, we're stabilizing. And I guess that's the point I really wanted to make is we've sold off, but we're stabilizing. We haven't got a huge bounce in risk yet, but that's not to say that we won't. The S&P is trying to, get a foothold where we're at. The thing is, and I think we all, have come to the conclusion is that the numbers that we're seeing out of China um, are bad. They are getting worse, but what we're going to be looking for now is how well is it contained from here. Do the number of cases start to taper off instead of continue to accelerate? I still think that we probably have a couple weeks because of the travel. It's really all about, like I mentioned in the week ahead video, and I've mentioned here, it's the unfortunate timing of this coronavirus, which is circulating around when there were so many Chinese that were traveling for the Chinese New Year. So that and the incubation period happens to be 2 weeks. So I still think that we've got a couple weeks of um, of 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 cases probably accelerating before they level off. Um, hopefully I'm wrong. For the reasons of obviously humanitarian reasons, I hope I'm wrong. But the one thing that we have to look at, even if the cases stabilize, is the negative impact that it's going to have on global growth, specifically China growth, but more importantly, global growth. And I think that's what's going to end up weighing on the market a little bit more. Now, also take into account that tonight is the Iowa caucus too. So, as the market grapples with the idea that Bernie Sanders might be the, Democratic front runner, that I do not feel is priced into the market. So therefore, the markets might still be under pressure. So to make a long story short, and this is, my argument on Friday. And if you guys were, listening in on Friday, I think you probably ended up doing pretty well being short the S&P. I've been short SPOOs, so I'm fine with it. And while we're below, like, roughly this 32, let's just call it 3260, 3270. I don't really see any reason to be on the long side of the equity markets right now. Whether you decide you want to stay short or you want to continue to be short, that's up to you. We are making lower lows and lower highs. Now, what I would think here is probably your next level of support. Should we continue to break lower, the real key support for me is going to be this 3160 level, 3150. It is a 38% retracement. It's a big level of support. One of the other things that we should take into consideration is relative strength. You can see here, relative strength on the S&P is now, has now worked off oversold conditions. You can argue with me and say, well, Blake, it's divergent. It is divergent, but in order for markets to continue to sell off or continue to rally, they have to work off oversold conditions before resuming. So if the stock market is going to resume lower, then this RSI may consolidate a little bit more before breaking down again, and that means that the S&P could do something like this, before we make our way lower. And that's kind of the way I see it right now. One of the other observations that we should make regarding the FX market now is the US dollar Japanese yen. If you were listening to the week ahead video, I did a very impromptu, I uploaded via the hotspot. I had to upload all the recording equipment and yada 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 for my laptop. So I did it without much research yesterday. I didn't get an opportunity to read all the emails that I usually read, all the research that I read, look at all the events and cue in all those that I normally do every week for the week ahead video. But it was pretty obvious to me that if the dollar yen moved higher, that we would reject, 108.70, and we did. That was a pretty key resistance overnight. I know some of the traders in our chat room were taking advantage of the US dollar Japanese yen short when it got up to 108.70 or around that area. And I think that, this 108.70, 108.75, this is going to be really key resistance for the dollar yen. So if you can, squeeze off a short dollar yen, if you're bearish the risk, and you think that the S&P is going to continue to move lower, then I think the risk of the US dollar Japanese yen moving lower from those levels is quite high. So if you can squeeze off a short up there, that's going to give you the better risk reward placement for a trade. So I guess what I'm trying to say is, maybe if you can wait for a 108 108.70, 108.75 short, that might be best. Now, obviously, you're probably thinking, well, am I even going to be able to get that price? You might not be able to. I mean, maybe this market trades heavy, and our Monday bounce is what you're seeing right now. It's more of a sideways grind, and the S&P just kind of bounces around it near these levels before moving lower again, and then the dollar yen never even makes it up there. That's quite entirely possible. And you're going to have to make the decision what's best for you. But my 2 cents is that while we're trading over here, the risk of the dollar yen moving back below 108 and targeting this 107, roughly 107.50 level, that I think is a real risk for dollar yen, for what we're looking at the dollar yen. If you look at the longer term, dollar yen, we did reject really key resistance. A lot of people are viewing this as a false breakout, and a false breakout usually leads to a breakdown. When I say a false breakout, because so many people were looking at the solid blue line here, that the risk of a move back down towards, what is that, 105.50 level, I think it's pretty realistic. Now, is this all going to be coronavirus related? I doubt it. I think it's going to be more of a global growth issue related, and people just start, looking to sell stocks, because global growth is really, going to take a hit for everything that's happened the last couple of weeks. But are we on the cusp of a pandemic type of situation? It is. I mean, I look at the coronavirus, and I'd like to believe for humankind, I'd like to believe that it's well contained, but let's not forget that this is a version of, like, it's flu, and so the transmission of this coronavirus is very easy. It's got a high mortality rate, and on top of it, it's, you know, like I said, it's easily transmitted. I was going to make another point too, but the fact of the matter is, and we haven't. I know there's speculation that there might be some cocktail drug that's doing some good, but I haven't read anything that confirms that. That doesn't mean that it doesn't exist. I'm just saying that, you know, I've read very limited information on it. So I think that, you know, we're still at risk of a bigger, you know, move lower in equities, and could this be the black swan event that you know could happen? It could be, and I sure as hell hope it isn't, because that means that if, you know, a black swan event is happening as a result of what we're seeing here, it's going to be, you know, a lot uglier than you know most people want to admit. So let's hope it's not. Let's just hope that you know, I'm just, you know, drawing some early conclusions. Let's take a look at a couple other things really quick before I turn it over to Steve. This is my, you know, euro dollar. Let's go. Let me zoom in a little bit here. So this is a 1 hour chart. Now we had last week, if you were here, we were talking about the big inverted head and shoulder pattern. It completed. Okay, but now it looks like a cup and handle pattern. So the pullback, and you can draw it either way, however you want to do it. Okay, the pullback has been limited to a 38% retracement. The 50% retracement comes in around the 50 level. Okay, so there is a risk, while the euro dollar trades above 60 and maybe even perhaps as low as 50, that we have some, you know, cup and handle pattern developing here in the euro dollar. That is a big risk if we break 111. All right, so you know, it's too early to tell at this stage in the game, but you know, we are looking at a lot of data coming in for the U.S. this week. We have ISM reports that are being reported this week. You know, all of our, you know, kind of advanced, you know, manufacturing and services data coming out. Then we have non-farm payroll on Friday. So depending on where the euro can find a foothold around here, if we can find a foothold around the 50-60 level, 110.50, 110.60, the risks of the euro dollar building some sort of base and possible inverted, or excuse me, a cup and handle pattern, I think is quite high. Now, it's going to need a little help from the cable, and the cable's gotten absolutely demolished today. You know, we've, you know, hey, look at the UK. They're now independent.
Can you get a projection on a cup and handle if that manifests?
Oh, yeah. So if you, for a cup and handle, it's pretty easy. Okay. So what you do is you measure the bottom of the cup to the top of the cup, right? Which would be roughly right here.
Okay.
Then you take this measurement and you go to wherever the bottom of the handle is. So let's just say, for argument's sake, that we have seen the low today.
Yeah. Okay.
Let's just, for argument's sake, let's just say it does make a cup and handle and break out. So the projection would take us to 111.65.
Thank you, Coach.
Yeah. So I mean, that's if it plays out. So now, you know, obviously,
that would also be about 1.618 from these levels here off the first rally.
Yeah. Well, let's see. It would go something like this. There's 127% extension. 161% extension comes in, you know, 111, whatever that is, 111.80, 111.90. And we could very easily overshoot and tag that too. So
thank you, bro.
Yeah, that's you know, if it develops, and we're in the if stage. It's not the I'm 100% confident that this is happening right now. But cup and handle patterns are some of my favorite patterns, because they're not followed as closely as
I'm always in
patterns.
the if stage.
What's that?
I'm always in the if stage.
Yeah, we're always in the if stage. Sure, that's a good point. Kind of always. Well, if
But I'll
then.
tell you something else I learned from you. I no longer live in woulda, coulda, shoulda land.
Good.
Yeah.
Martin was SH comp. Let me see. Is that right? SHCOMP.
Yeah, that is correct, Blake.
Yeah, we have a smart crowd.
Oh, it's a CFD. Okay. Wow. Okay. So here. Thank you very much. You know what? I should probably. Since I always look at Bloomberg, I forget what all these. I forget that there's a bunch of. Here, I'll just add that to my list here. That there's always a CFD, or a lot of times there's a CFD. Thanks, Steve. So yeah, it's an ugly, unsightly gap, right?
Wow.
Yeah, it's ugly. And I'm sure the Chinese market can bounce a little bit, but I don't know. Damage
That's
wise,
like a car wreck.
yeah, it's pretty ugly. Let's go over to the weekly chart here. What's really ugly about that is the lack of upside follow through when U.S. equities look so good. Yeah, it's pretty ugly. If just by just glancing at this,
In essence, Blake,
I would imagine we're coming down here.
If you had bought that 10 years ago, you would have been underwater. It's gone nowhere.
Yeah, I mean, it's ugly.
Like Japan, or even Japan's done better in the last 10 years, right, Steve?
Nikkei's done a lot better. Yeah.
Yeah.
Yeah,
Nikkei has done a lot better due to the huge depreciation of the yen. Mostly, to be honest.
I think I have it over here. I'll show you guys real quick. But yeah, Nikkei's not near its all-time high, but it's definitely a lot higher than where it was 10 years ago. You go back into the 80s, and we're
29,000.
Yeah. I mean, it's got a lot of distance to get to those levels. Anyway.
Yeah, but still, Blake, if we price in the Nikkei in dollars, for example, instead of yens, that will look ugly as well. So if you were a foreign investor buying the Nikkei, you would still be a lot underwater because you would have to convert back to dollars.
Yeah. All right. Well, hey, good morning, Steve. How you doing today?
Mate. Good. How have you been?
Well,
other than the internet,
other than all the internet and Wi-Fi,
other than all the aggravation,
not bad. But today, I'm keeping my head above water, taking a lot of vitamin C, and trying to stay away from my wife. So anyway, we'll see if if I can continue to avoid the what would seem inevitable. So I'm going to pass it over to you guys, and I will do the daily roundup webinar. So it'll be probably short and sweet. So I'll see you guys then. Don't forget, if you guys haven't tried out ForexAnalytix, make sure you do so. It's only $1 for 10 days. And if you're looking for a brokerage firm to fit your needs, make sure you visit Forest Park FX. They are our webinar sponsor. They're always here to help you find the best broker to suit your needs. And also you could possibly be part of the ForexAnalytix community for free or through your trading if you use the reimbursement program. So make sure you ask questions because their Skype and email is right here. All right, guys, I'm going to pass it over to you. So
thank you, Blake.
Thanks, guys. Have a great one. Good luck today. Hopefully I'll have my internet up tomorrow. We'll see.
You too, mate. Let's hope so.
Good morning, guys.
Good afternoon,
Hey,
Steliosis.
Hey, how you doing?
Good. How are you guys? Well,
good.
Steve, the Kansas City Chiefs won, so you know what that means for the market.
No, I have no idea what that means.
Super Bowl indicator. If an old AFC team wins, it's a down year, and Kansas City's an old AFC team.
Is it like the groundhog in his shadow?
It's like the groundhog fumbling the ball on the 1 yard line.
Did you hear? Did you hear Trump's what Trump said after the Kansas City Chiefs win?
I saw the tweet.
No, I didn't.
I want to congratulate the great state of Kansas.
Yeah, the great state of Kansas.
I mean,
yes.
I'm Greek and I know it's Missouri.
Yes,
Yeah,
here.
oh my goodness.
What?
Anyway.
Oh gosh. Oh.
Right. Okay.
He played hooky from geography class at Wharton. At Wharton.
To be honest, unfortunately, he's not the only.
Yeah. Anyway. All right.
Okay. So what have we got today? Today is the
It's gonna
first
be the day.
the first trading day after the after Brexit
Brexit.
happened, and we already have some comments from Michael Barnier, who is the very stiff person negotiating on the European side, and he said a couple of things. The pound is actually dropping today, probably on the back of these comments. That one was he said that the EU is never going to agree any kind of trade deal unless the European fishing boats have access to British waters. Like, fishing is actually very important for both sides, apparently. And Boris Johnson has always claimed that the UK will have its own fishing waters, end of story. You know, there's going to be nothing, no sharing, etc. So this is already a big stumbling block.
I'm really looking forward to the day that everybody's going to be an expert in fishing territories and areas. You know what I mean?
You know, this whole Brexit thing's starting to smell a little fishy to me. I'm sorry. You know.
No, that's good.
You had to say it. I know.
Overall, Barney has been pretty firm, and he's saying that Brussels are going to be very demanding to insist that if there is going to be any kind of access to the European markets for the UK, you know, high levels of access, then the UK is going to have to follow EU rules. So this, for me, is as if saying, yeah, you can leave, but you're going to use the same rules as before. So, you know, bottom line is the step has been taken, and now we have until, I think, the end of the year to formalize something, and it's not going to be easy. So the pound is going to get
volatile
and waves of buying, selling as the market.
Yeah, we're going to get a good statement, there's going to be buying. We're going to get a bad statement, there's going to be selling, and you know, you name it.
Yes, we also had some data out of the UK today. Manufacturing PMI came in at 50. It's been 47.5 was the last print, so it's gone back to
neutral
territory. Some PMIs out of Europe as well, marginally better. Before people talk about green shoots, Bloomberg had the headline about green shoots in the Eurozone, you know, hold your horses, wait. You know, this is definitely a tick up, but, you know, for people to say this is a trend, you need to see continued prints, which are positive. So I'm not convinced yet.
Yeah, I'm less than convinced because, you know, we see a very, very tepid attempt of a slow recovery from the bad data we had during the previous months, but taking into consideration the extent and the amount of monetary policy stimulation, and if we are talking about the US and China, for example, you need to add there the fiscal stimulation, you know, it's extremely underwhelming.
Yes. The other thing, obviously, equity markets are, well, we had a big sell-off on Friday. They're up today, but, you know, I've been talking about this in the chat room and in my analysis on the ForexAnalytix side. I think, you know, we've been saying that equity markets are rich for some time. They've been grinding higher. I've been looking for a catalyst, something that's going to cause the next leg down, just like the raising yields did that in 2018. I always thought it was going to be yields going higher again, but now I think I don't think it's going to be a global epidemic where, you know, it's going to be World War Z and we're going to all go into bunkers. But I think this has the power potentially to cause this drop in confidence and for selling to start. And we know
it definitely has the power to hinder economic growth for a period. And given the fact that it had already slowed substantially, you know, that might be, you know, the drop, you know, the final drop in the ocean of, you know, worrying, you know, news and prints, etc.
And all you need really is for the selling to start. And when it starts, you know, people are leveraged and, you know, the market's pretty long. So, you know, when the selling starts, you could get a 20-25% move, just like in 2018, which in fact could be a healthy move as well. You know, you always said this. So I wouldn't be surprised. I'm actually now bearish equities, you know, the indices.
Good out on the opening Friday still.
Yeah.
And nice short, Steve.
Yeah,
Yeah, thank you, coach.
that was lucky, I think. But
just one thought I keep hearing about this comparison China with SARS. China's economy was in a much stronger position during SARS than it
During
is
SARS,
right now.
yes. Yes.
Okay.
True.
That's all.
And from what we can tell
It's all
so
fishy.
far, SARS was also, a lot less threatening than what we've seen so far from coronavirus.
Well, I don't know the details, but I'll take your word for it.
The rate of expansion has been, extremely higher in coronavirus. So with the data we have so far.
Mm-hmm.
So let's see. Okay, what else did we have,
Okay.
Stelio? Anything else during the weekend?
Not really. No, that was the main event, really. So that's it. We're all waiting for payrolls on Friday and see what happens.
Okay, thanks.
Thank you, sir.
Thank you. Coach, any specific requests to begin with? The charts? Oh my God. He's a slacker. Okay, so several of the tickers I'm monitoring are actually at quite interesting levels. And since we have a question about the Aussie, I decided why not? We can start from there. So the Aussie has now almost completed the head and shoulders formation. I mean, just a few pips above it, and tagged this previous lows area. So that's one. I mean, what happens from here is going to be quite important. If we break lower, this is going to be another multi-year low. I mean, we will have to go back to 2009 to find lower prices, and definitely, comparisons to 2009 are never good. So the Aussie is in the brink of collapse if we actually break down from here. Now, an initial reaction from such an important horizontal support area, of course, would make sense. So I'm not advocating that somebody should be selling here. Somebody should have sold over there and take some profits over here. But regardless, I'm closely watching this level. At the same time, the Kiwi is still, quite some distance away from the lows, from the recent lows. But irrespective, it has already broken down from this corrective channel, from this corrective formation, and that is definitely a bearish development. So even if we see a rebound from here, I think that a retest of this broken channel might produce another selling opportunity. At the same time, the Aussie Kiwi is literally stuck, retesting again and again and again this ascending channels trend line support. I think a breakdown from here is going to be a very bearish event, which seems quite likely given the fact that we've found support here, but we are so far unable to actually produce a decent rebound. So that is something that is worth noticing here. So further underperformance from the Aussie, if we break below here, is more or less guaranteed in my mind. And a continuation lower towards parity seems like a very likely scenario if that's the case. Now, at the very, very beginning of last week, one of the first things I had mentioned, I remember specifically, was the breakdown, which looked bad both in the case of the Aussie yen with the Kiwi yen. So the Aussie yen indeed broke through that confluence of supports and produced a very nice follow through the week that followed. But keep in mind that it's currently testing the 61.8% fib. Now, even a rebound from here would still not fix the technical picture here, which looks like this breakdown might produce lower lows, so a move below the 70-cent area. Of course, that doesn't mean that an initial reaction from here can't first take place before we can actually see lower levels. And in the case of the Kiwi yen, more or less the same deal. We're testing previous, we had a range here for quite some time from the 22nd of October to 25th of November. So that was a 1 month trading range. We've now been testing, this is the second day that we're testing the confluence of the 50% fib of that move higher and that resistance area. A little bit lower, we find another confluence of supports, roughly at 69 cents. Same deal here. We might see an initial reaction higher, but I do think that an eventual continuation lower looks, extremely likely. Given the fact that the USD yen is also testing a very important confluence of supports here, the scenario of an initial rebound makes even more sense, right? Key support area here in the USD yen, confluence of this ascending trend line support and the 200 daily moving average. Needless to say, I believe that the daily close below this area is going to be quite a bearish event, and in that case, I will be looking for lower levels in the vast majority of the yen pairs. So, in my opinion, it's going to be a very bad idea to try to be long the yen pairs if USD yen breaks through this wedge. And in any case, as long as it remains below, and if you remember, we kept stressing the importance of that trend line resistance, as long as it remains below this multi-year, because it dates back to 2015, to the summer of 2015, as long as we keep trading below this multi-year trend line resistance, the risk reward definitely doesn't favor long positions. Okay. Now, the next question is what happens here with risk. So, as I wrote in the weekend analysis, there are two different shorter term and the longer term downside targets in this case. One of them, if you look at the 4-hour chart, is the fulfillment of the implied target of this ascending wedge, which we broke through actually roughly 10 days ago. So that would imply a move down towards 31.80, 31.85. Now, that's the shorter term target here. The longer term target would be going to the daily chart, looking at this blue ascending wedge and checking the implied target in this case, which would be a move down towards 28.60. Of course, that's not as easy to do because that would actually imply a 15% move from the highs. Of course, under normal circumstances and at a healthy market environment, 15% corrective moves in such a multi-year uptrend would be rather frequent and healthy. Now, under these market environments, I think that they will do whatever they can to prevent something like that from happening, because they would be very much afraid that once you see a 15% sell-off, it's going to be quite hard to restrict it at 15% and not get it to 30% or a 40% or a 50%. So, there's going to be a lot of defense from, central banks, etc., and all the big players to not let such a healthy correction take place. But that doesn't mean that they're going to succeed. So, my target, my first target remains to be at 31.80, and if we break through 31.80, we can start discussing next targets. The next one is like 31.55, etc. You can see plenty of support resistance zones, but my longer term target in that case would be towards 28.50, 28.60. Now, that's how the S&P looks like. Here is the Dow Jones. Dow Jones doesn't look much different. You see the larger ascending wedge here. We had an overthrow, which is very usual in bull markets to get an overthrow, and now we've broken down below it. We retested that previous resistance, which we overthrew as resistance again, and we also retested that blue trend line support as resistance. In both cases, we failed and we continued lower. As you see, we reached on Friday, and the first area of support that makes sense here. We might see an initial rebound, but I do think that until proven otherwise, selling a rebound for another leg lower would make much sense. And here is the Nasdaq. The Nasdaq is by far the one that's been holding better so far, because if we assume that the Nasdaq might stop here, this looks like a triangle. So far there is no technical damage doing the Nasdaq. So far this looks like a horizontal consolidation, and having a look at it in isolation would make sense to expect that this could produce another leg to the upside. And it's important to see if the Nasdaq, because the Nasdaq has been leading for quite some time, to see if the Nasdaq can actually break through this 8,900 support area and actually start producing lower lows. The Russell, unsurprisingly, remains the weakest. It's the only one that hasn't produced a higher high. We've talked about it in the past, and it is now backtesting. On Friday. It closed right at a very important support resistance area. That support resistance area was actually capping price action since the very beginning of 2019, until we finally managed to break above it at the end of November of 2019. So it's going to be quite important to see if this previous resistance can now act as support or not. But irrespective of what's going to happen in the medium term, initially, a rebound from here would make sense. So, assuming that we're going to rebound from here, which seems likely that we're going to see a little bit of a rebound, the question is what happens from there? Do we continue lower and bridge through that, or we're going to be pushing to new highs? So, I'm looking closely to see what's going to happen there. And here is the DAX, also quite a nice bearish development for two reasons. First of all, because you can also draw a quite nice ascending wedge here on the DAX as well, which we decisively broke through on Friday. But it's also the fact that we got rejected again from the same area that rejected price action back in 2017 and 2018 and created that double top over there. So could this be a triple top? I mean, so far we got rejected from there. We incrementally produced a higher high intraday, but that doesn't really change the fact that in essence it's the same zone that got the DAX rejected here. And here's the FTSE. FTSE got rejected from that trend line, but an important bearish development here will be breaking through this trend line support. Now, until that happens, also assuming that we're going to see an initial reaction from there would also make sense, right? So quite a key support area around 7,200, which I'm closely monitoring. And here is the Nikkei. I kept mentioning that was an important support area. We did break through it and close below it on Friday, and we've retested it today as resistance. So far it seems to be holding. So there is the potential for seeing a much bigger sell-off in the indices, but I think the next couple of days are going to in essence show us if that's going to be the case or not. Now, the VIX, I had mentioned that I was expecting another leg to the upside in the VIX. We did see a higher high towards 20, but I'm still unsatisfied in the sense that my target still would remain a retest of the 25 area in the VIX, and that hasn't happened yet. So I'm still optimistic that the VIX can produce another move to the upside towards 25, and that is why I'm still holding my short S&P. I mean, I could take some profits, but now that I'm, I have a risk less trade, I'd rather hold it and go for the for the bigger bucks than not, because that was my initial plan. So I want to follow it through. Now, let me go through some of your questions. We have questions about gold, crude again. Okay, a lot of people about crude, and yes, I would mention crude because crude is actually at a very, very key support area, and that is also another element that makes it likely that we might see an initial reaction from here. I kept mentioning for quite some time the importance of this 50.5 to 51.5 support area for crude. You can see it here. I mean, triangles, trend line support, horizontal support area, 61.8% fib. I mean, big confluence of supports, and it's going to be very important to see if crude can hold here. If it can, it might produce a rebound towards 54. If we break through it decisively, I think that's going to be another very bearish development. I mean, if this area doesn't even manage to produce some type of a reaction to the upside, that's going to be a very, very bearish development. So it makes 100% sense if you want to try your luck playing the upside for a rebound here in crude. The risk reward is definitely favorable, but if we slice through 50.5, don't be on the wrong side of this market, because it can actually punish you severely. Now, having to do with gold, nothing has really changed here in gold. I mean, gold is gold closed at multi-year highs on Friday, so it wasn't a higher high on an intraday basis, because intraday we saw that that spike to 1611 back in the first days of January, almost a month ago. But we did close at the highest level we had seen since 2013. So, how can you argue against somebody's willingness to be long this market? I mean, I've kept reading the same headlines from people that are bearish precious metals, especially gold. They keep mentioning the extreme COT levels, for example, for months now, but that hasn't stopped gold from moving to the upside. It's going to play a role once we see a bigger move to the downside, but so far there is nothing really here that from a technical perspective says, okay, gold has stopped and we should be looking at lower levels. Now, silver is still underperforming.
We all want to trade like the commercials, but very few of us have the deep pockets of a commercial. So, if you're always trying to trade on the side of the commercials, you're going to end up being in a commercial about how 90% lose trying to trade.
That is very true, because as you very well said, they have very, very deep pockets, and the average investor is nowhere near
They're
that.
Producers, they're users, they're not 10-lot traders.
Indeed, that is very accurate. Now,
Anyway.
there was also a question about USD CAD, and that is a good opportunity to mention the USD NOK as well. So the USD CAD is at the 78.6% fib, also very, very close to the 200 daily moving average. Actually, we did close right at the 200 daily moving average on Friday, and who knows, I mean, it's still early in the day. We might not make it to close above it once again today. So
yeah, there's some pretty good divergences on the 1 hour and the 15-minute has a 3 drive.
And if you want to be buying it, as we said on Friday, I think you should be looking for a pullback towards that support area here. If you really want to buy it for another move towards 133. Now,
kind of ties in with your talk about crude being
a likely rebound from here. Yes, exactly. So, bottom line, I wouldn't be buying USD CAD up here, but I think you can attempt to buy it on a pullback towards 130, 130 for another move then towards 133. And if we make it 133, that's going to be a very, very key area for the trend. And the same thing applies to USD NOK. Look at this monstrous move higher from the USD NOK, which is almost at the highs here, right? So after such a big move higher, we've actually seen a 6% move higher in 22 trading days, which, for a currency pair, it's quite a big move. It doesn't really make sense trying to buy USD NOK here. I mean, you want to buy it, in my opinion, you have to wait for some type of a pullback here as well, and then look for another move towards this multi-year ascending channels trendline support resistance. Okay, so in both cases, I would expect that sooner rather than later we should see at least a healthy pullback to give you the opportunity to be buying. USD SEK less extreme than we saw in USD CAD and USD NOK, so the SEK seems to be quite stronger from the Canadian and the Norwegian. So if you're looking to play the counter trend move, probably worth looking in shorting the USD SEK instead of the other two. It's getting quite close to this 61.8% fib, so I wanted to mention that as well. And we have another good question. Did you see Shakira in the Super Bowl halftime show by Columbia? Yeah, Joe, that's a good point. Yeah, I saw some plans actually. I mean, in the news with Jennifer Lopez, I think they were, right? So question about palladium. Yes, we're going to cover that. And a good question about Euro Pound. And I said this is a good question because Euro Pound is another currency pair that is actually at an interesting juncture because it's testing again. This is like the, what is it? 1, 2, 3, 4, 5, 6, 7, probably 8th time in a couple of weeks, this descending channels trend line resistance. So we break above this. It's also confluencing, by the way, with this horizontal support resistance area and the 50 daily moving average. So I think that a move above 85 cents would produce a nice risk reward opportunity against the double bottom we've seen here for a move towards 87 cents. So I think that Euro Pound is worth monitoring because it might actually break out to the upside from here, and that would probably be good for another 200 pips of upside. Okay, even if we just project, let's see, the first leg higher with the second one, let's see what kind of a target we derive from that. Yeah, 87 cents exactly, as I said, 87.03. So 87 cents. So above 85, you have a decent risk reward ratio because you can have a stop loss just below 84 cents. So a little bit more than 100 pips and look for a 200 pips of upside. So an almost 2-to-1 risk reward ratio. Okay, so I do think that the Euro Pound is quite decent potential trade above 85. And the question about palladium. And coach, do we have an interview today?
We sure do, buddy.
Okay, who do we have?
Brent Carlisle.
Okay.
FX.
So I'm assuming he's going to talk about FX.
You're like Nostradamus, man.
Yeah, I mean, you really need to have Einstein IQ.
He's got a very interesting background. It's going to be a great interview.
Okay, good. So palladium, still this is the 6th day of a consolidation after that huge down day. I think it was close to 6.5% lower, and nothing has changed in my viewpoint here. I expect this consolidation to fail sooner rather than later and produce another move to the downside. I'm still looking for a move towards 2,000 flat. So that's what I think about palladium. So nothing has really changed. Let me see if there is any questions I left unanswered, and if there are not, you can go ahead and yeah, I think I covered everything, coach. Right on time.
Okay, buddy. Hi, Brent. Welcome to Face. Looking forward to meeting you. Going to get you set up
By
now.
the way, Coach, USM, USISM manufacturing coming out any second. So let me
Go ahead.
give you the number. A little bit delayed from what I see. Here it is, by the way. Expected 48.5. The previous reading was at 47.2, and we still don't have the number. Okay.
Hey guys, can you hear me?
Hello.
Hi, Brent. Yeah, we can hear you.
Okay.
Okay, so once Steve stops sharing after this number.
Let me do it. Yeah, no problem. I'm going to tell you the number. It's okay.
Oh, okay.
He can go ahead and share.
So Brent, there's a green box for sharing your screen. It's a drop-down menu. And you click that, and then we'll be able to see what you're looking at.
Okay, I really don't need to share my screen today. It pretty much.
Oh, okay. All right, well then I will. So I could at least cover some of the things that you're talking about. And
Sure.
okay. So I was gonna second screen it. Why don't we start here? Why don't you tell us about a little bit about your journey into the trading industry and how it began for you and what you may have been doing before that.
Sure. So I basically have a background of just being an individual who was incredibly interested in markets and wanted to explore that further from a pretty young age. And so I think I remember in high school, I had a teacher who was talking about this guy named Alan Greenspan, and he started getting
the maestro.
into Federal Reserve stuff. The maestro, yeah, all that. So I started getting interested, and I placed a few trades during college. I think my first trade was in a May cotton futures contract, and I had absolutely no idea what I was doing at the time, but I'd kind of taken some courses, read up on things.
Was it a winner? Your first trade?
It was a winner, but my second trade was not, because I took.
Well, I'm just saying there was a superstition on the floor at the Merc that if your first trade was a winner, it was bad luck.
Yeah, well, it was
Just a
definitely bad luck
superstition.
for the next trade. So.
Mine was, but the bad luck only lasted, I don't know, 30, 40 years. So anyway, Brent, so you know what I'm interested in is you were born here in the States. What was the attraction to move to the Netherlands?
Yeah, that's a good question. And part of it actually does have to do with the time zone of being a Forex trader.
You want to trade Europe?
Yeah, I think the time zone's better over here, especially for somebody who doesn't love getting up at 5 in the morning every day in Colorado, like I did for so many years. But besides that, I do like the personal and cultural aspect of being, you kind of feel like you're in more of a central location for traveling and just getting a taste of more of the world, I'd say, than North America. So.
But how did you choose? I mean, there are a lot of places in the world. I'm just curious on the attraction of Netherlands. Besides time zone,
yeah, part of it was, as an American, there's kind of a neat program to get a visa if you start a business here.
Oh, sure. Okay.
Japanese and Americans can come to the Netherlands and start a business relatively easy. At least when I came. I don't know if the rules have changed in the last couple of years, but you have to prove an income to stay longer than 2 years, but it'll get you in the door.
Okay, interesting. So that's and were there tax advantages?
Not necessarily, but I suppose on from a trading perspective, your individual funds are not necessarily taxed based on capital gains. They take your balance every January 1st, and they tax like roughly 1.5% to 2% of your funds. Yeah.
Oh, interesting.
So
that's an advantage
if you have capital gains, but you still have to pay that if you have losses. So
Okay. All right. Okay. Interesting. So, did you have any mentors or people that influenced you that, helped you along the way or showed you a new paradigm? And, I believe, technical trading is one thing, but most of this is in our head. A lot of it is psychology.
no,
What do you think?
certainly. I did some courses with Larry Williams and Jake Bernstein, and read up on some other stuff. And I think I kind of got acclimated to markets over a few years in really diving into the technicals. But over time, I found that more of a well-rounded approach where I'm looking at, everything that I believe will drive price over a certain period of time, the duration of the trade, including technicals, including fundamentals. And then the thing that I really added in to the repertoire eventually was liquidity from central banks and fiscal policy, potentially from governments, things like that. That's pretty instrumental to my trading these days.
Okay.
So
So
I
with,
try to tie it all together. And as far
right.
as, where did I get the ideas for this stuff? Just like you guys, have just been around markets, reading everything I can, trying to improve myself. And I just kind of found that place, that happy place that worked for me after enough time and getting hit in the head enough times that you kind of learn from some of your mistakes. But I'm still
Okay,
getting
well, with all of the tools that you have in your toolbox, what's your narrative for the dollar here in 2020?
So I was pretty constructive the dollar last year. I was bullish the dollar and also bullish gold, which is kind of odd bedfellows. But around the turn of the year, really, I started to sour a bit on the dollar, and I think there's pretty much a lasting catalyst that we have here, a series of catalysts that are going to continue to drive the dollar lower. It might get, it might kind of remain buoyant with some risk on or risk off haven flows during this coronavirus episode against some, in some pairs, but I'm really seeing some say political and budgetary matters coming into play really soon.
Which are?
So the Fed balance sheet has quietly plateaued recently around $4.15 trillion after rising $400 billion in less than 4 months. And the dollar found some footing around the same time that the balance sheet plateaued, even before the worst coronavirus headlines started triggering flows into the usual suspect funding currencies, yen, Swissy, euro, and whatnot. But I think going forward, is it really going to be the coronavirus that we're talking about in 3 to 6 months? And I sure hope not, for the human toll and everything involved. But I think the U.S. Democratic primary elections could prove to be kind of an immediate negative catalyst for USD, because it'll bring the budgetary picture into perspective pretty soon. And no matter who gets elected, my view is that it's going to be a regime that's going to be pushing for fiscal expansion in the U.S. And I think it's going to happen in the U.S. before it would happen in Europe. And I think Germany is going to be pretty reluctant to have the EU follow course with something like helicopter money, MMT, that kind of thing.
So is Euro 110.60 a good value?
In my view, it is a good value.
Well, you're who I'm talking to.
Yeah, well,
Okay.
a lot of people disagree, but talking
All right.
6 to 18 month time period, which is kind of what I like to analyze, is it's a screaming buy for me.
Okay, a screaming buy. Okay. What do you do about risk management when you have a fundamental narrative like that? Would you say you just scale in, like from here down to 108 if we get another pop in the dollar, or do you start to rely more heavily on your technicals, and from what time frame do you make these decisions?
The risk management is really the crux of how I would go about a position like long Euro USD, because I like to dabble in kind of small positions and getting the best price I can, on dips. I'm not one to seek the technical confirmation that a lot of other traders do. Sometimes I just dip in, but it's with small size.
Mm-hmm.
And I'll see how that goes. And, I always have my levels where I will add to the position as, say it falls in this case, as long as the overall narrative is intact.
Okay, with your negative dollar outlook, what's your favorite long against the dollar?
So my favorite long against the dollar would be actually commodity currencies, but not yet. So as we have kind of this big coronavirus and global growth slowdown and really just a risk-off scare, and we're not really sure how it's going to turn out. I'm not going to be wanting to pile into commodity currencies right now while they're falling off a cliff. But
okay, well,
once we start seeing some stability,
let me ask you this. I'm showing Aussie.
I'm
Can you
going to be
see my
taking
chart?
a look. Okay.
Okay, so here we are in the Aussie, about to make new weekly lows for quite some time.
Mm-hmm.
And here we have the Kiwi well above those lows. So they're both commodity currencies, Kiwi showing relative strength. What would be your preferred long between Aussie and Kiwi? Or would it be Canada?
Well, out of those you mentioned, definitely
Well,
Kiwi.
those are the
I like
commodity
relative
currencies.
strength. Yeah.
Yeah.
You could also take a look at the Mexican peso.
Oh,
and,
yeah. You like it?
And then at this moment, I don't. But
Okay.
once the risk narrative kind of levels out, and you're talking about fiscal expansion policies and more stimulus on the fiscal side of things, which is what everybody is kind of opining for right now, I think the EM currencies will be set to surge. I'm more of a G10 currency trader than the EMs, but I would take a look at some equities that are priced in and denominated in EMs in the future.
In what?
In emerging market currencies such as the Mexican peso, or potentially even like the Colombian peso if you want to get exotic. I don't tend to get very exotic.
Well, Shakira certainly is.
that is.
You can't get any more exotic than that, brother.
You're not going to get me you're not going to get me on the other side of that trade.
Okay. So you're talking about what fiscal stimulus. So to me, that couldn't happen any earlier than a year from now, right? Because that's not going to happen during an election year here in the U.S., do you think?
I think you're correct on the technicality of when it would happen, but as far as when it would start impacting markets, I think it would happen when the probabilities of said policies taking place would start getting baked into the cake.
And what would that be? A Trump re-election, or there's going to be a spend on infrastructure on the other side? What's your outlook on this election?
Yeah, no, I think Q4 of this year, if not, then Q1 of 2021, you're probably going to start seeing some plans, trotted out with fiscal expansion, and potentially financed in part by the Fed, and that's if we make it that long. Before then, there could be some increased balance sheet movement on the Fed side just to kind of keep things stable this year.
Okay.
And the money has to go somewhere, Dale. I mean, when they're creating, that much money, part of my job is to figure out where it's going to end up, because it doesn't always end up in the same place. It's not always going to go to commodities or gold, but I think gold is definitely going to be a benefactor going forward, but you don't want to pile in, after a spike, jumping into momentum if that's not your strategy. And that tends to not be my strategy, but I am constructive on gold as much as anything on dips.
Okay. Over silver?
Yeah, the thing with silver is that it has the industrial use aspect that's kind of been dragging it down relative to gold. So if you want just more of a pure precious metal play that's just kind of on the other side of all fiat currencies, it's gold. But I do like silver. I'm in both, but I'm more confident in gold.
Okay, and any view on energy, or even more importantly, yields? 10-year looks like it's about to challenge all-time lows. Yields work their way into your equation for your outlook on asset classes?
Yeah, as far as treasury trading or just trading in fixed income space at all, to me it's somewhat of a no-win situation, because I think the yields are low enough that they're negative real yields pretty much across the board out to pretty long duration. And so I don't want to be long treasuries unless it's just a short risk off type of a play. And getting short treasuries is going to get your knees chops off if the fiscal authorities come in and cap yields, or the monetary authorities, as has been discussed recently.
Okay.
So I think we're looking at the potential for yield curve control to some degree within the next, say, 12 to 24 months.
Okay, and that control, the Fed would obviously like to see steepening rather than inversion. You think they'll be successful?
I think they'll steepen the curve, certainly.
Okay.
The question is, at that point, you could have some pretty deeply negative real yields. If you're pinning the 10-year Treasury at, say, 2 to 2.5%, and the balance sheet starts climbing to maybe 6 or 7 trillion, you're probably looking at some, a deeply negative real yield at that point. So I don't really want to be long, but you can't be short because the interventions are on the other side of that. So I'm not really personally all that interested in trading treasuries for the moment. Crude oil, definitely. If you watch the price action on crude last Friday, it seemed to be wanting to find a temporary base in the 51 to 52 per barrel range, even as the S&P 500 continued to drive lower close to the close. So there was some relative strength, and part of that might have been USD base, and part of it might have been the OPEC jawboning about bringing forward the meeting, the OPEC meeting, and potentially cutting by up to 500,000 barrels per day to take that out of the market, because right now China is consuming 3 million barrels less per day. No surprise there. And
so you like these levels to accumulate, and we've had about a $15-16 decline from the Iranian retaliatory strike in Iraq. Is this just going to be a bear market rally, or oil shares have really been decimated over the last few years? Do you think it's an investment or a trade?
Oh, definitely just a trade. I'm with you, Dale, on that. I don't think
everything's just a trade now, isn't it, Brent?
Off unless the dollar just gets, obliterated. But I think we're close to levels where we could start finding a strong risk reward from the long side if things calm down a little bit. So in terms of the risk management that you were talking about, I would start to take maybe small positions at 51. I would probably add a little bit at 46 to 47, as long as we're seeing not a complete, contagion spreading everywhere and things are getting worse, because some of that's already priced in. Some of the uncertainties there. It's just we're not sure yet how that will pan out.
Okay, well, Brent, here's your Twitter icon and picture of you. What's your business model, and are you looking for people to follow you on Twitter? Why are you on social media? I know you have a fund that only accepts credited investors. So what's your purpose for being on social media?
I think as much as anything, it's just, like with ForexAnalytix, it's just a community to share ideas and get information.
Mm-hmm.
And for me, it started out a lot less promotional, and it was just more about information sharing.
Okay.
So
because you were lonely. Go ahead, say it.
Yeah, I know. I mean,
Are you lonely, buddy?
It's a lone wolf career at times.
What are the women like in the Netherlands?
Well, I don't know. Ask my wife.
Is she from there?
No, she's not. She's
you
more
both came from Colorado? Okay.
Yeah.
All right. Well,
Wife and
anyway,
dogs.
very diplomatic answer. Whoever wins the next election, I'm going to recommend you to be the ambassador, our ambassador to the Netherlands, because that was a great answer. And
it's a wonderful country, and I love all of my friends and family in the States, and I'll be back this year for probably 2 or 3 weeks.
That's probably the hard part, right? Being so far away from your family.
Oh yeah, that's by far the worst part is, especially when something big is going on in a family member or friend's life that you want to be there for, and so that's tough.
Yeah.
There are a lot of good things about living overseas, but that's definitely the big downside.
All right, buddy. Well, it's a pleasure meeting you, and you're now one of my Trading Warrior brothers for being able to survive an interview with me.
Hey, Dale, it wasn't too bad.
All right, buddy. Good hunting.
Great talking with you. Yeah.
I hope you have a fantastic 2020, and just like the water flowing. What's the name of that river there in Amsterdam on your Twitter thing?
Oh, the Amstel, River.
Okay. Yeah, so I hope pips flow into your account like the Amstel River.
Hey, I'll take them when I can get them. Thanks so much.
All right, buddy.
Wish the same for you.
Everyone, that's Brent Carlisle's been with us, and you can follow him on Twitter at Brent Carlisle FX. We'll see everyone for Turnaround Tuesday tomorrow. Remember, most of all, don't just count your pips, count your blessings. Adios. Thanks again, Brent. And we'll see everyone tomorrow. Adios.